This first sheet presents the initial investment required to launch FoodSwap. We classify the investment into four main categories: property, plant, and equipment, intangibles, operating expenses, and working capital. Property, plant, and equipment includes physical assets such as office space, computers, and the logistics vehicle with a total cost of 4,010 million pesos. Intangible assets include software developments and franchise licenses totaling 100 million pesos, which are amortized over 5 years. Pre-operating expenses cover licenses such as the Chamber of Commerce and the Fire Department. Working capital includes payroll, raw materials like rescued food, rent, and utilities for the first few months. This sheet shows how the tangible assets are depreciated over the years. We use two methods, a straight line and sum of the year's digits. For example, the vehicle depreciates from 100 million to 10 million over 10 years, resulting in an annual depreciation of 9 million under the straight line method. This allows us to reflect the asset's loss of value in accounting terms and prepare realistic balance sheet projections. In this sheet, we include the loan request from financial institution. We request a 150 million pesos loan at 10.95% effective annual interest rate with a 3-year term. Also, the projected monthly installments is 4.48 million pesos, which affects both the cash flow and interest expenses in the profit and loss statement. This sheet projects food swaps operating costs from 2025 to 2030. The costs are divided into rescued food, packaging materials, salaries for a 3-person team, and indirect costs such as utilities, rent, depreciation, and amortization. For example, in 2026, an estimated 85 million pesos will be spent on raw materials and over 190 million pesos on labor.
Regarding the profit and loss statement, here we see strong revenue growth beginning in 2026 with almost 900 million and reaching over 993 million by 2028. This reflects the expansion of our food exchange platform, improving the business model's capability and profitability. On the balance sheet, assets increased significantly from 2025 to 2026, mainly due to the initial investment and the growing receivables. By 2028, total assets reach over 623 million. Liabilities drop to 0 as we by earnings capital structure over time. Average cost of capital is 7.38%. We assume 70% of financing comes from debt and 30% from equity with tax rate of 35%. This balance we evaluate the project's viability. The net present value is 356 million. It's far above for our financial, but also highly attractive for the investors. In summary, our projections shows that the food swap it's a scalable, profitable, and sustainable solution to a major social issue. And that's it. Thanks for watching.